Paul, welcome to the In the Arena
Thank you.
real estate segment.
Yeah, I appreciate it. I've never been in the arena. This is fun. A little exciting.
Like, promise the gladiator does not jump out behind the couch. If it did, we need to do that, man.
Yeah,
One time. I mean, today is the day, right?
Yeah.
It is.
To joke about that, but
So in these real estate episodes, we focus on the residential real estate world, and we talk a lot about 3 specific areas. But before we do any of that, we really want to talk about you, promote who you are, talk about your experience in the real estate world.
Yeah.
So how long have you been doing this for?
27 years.
27 years.
Yeah.
And it's funny. So
seen quite a bit of trends over the years too.
Which is funny because right now, after everything that's happened in the last couple of years, and more in 2025, so if people are watching this in 2040, they can go back and say, okay, where were we at in the world? But everybody right now, we're coming out of the slump. Everybody's starting to positive things are happening.
We're seeing some optimism in the market for sure.
People think this year is going to be the year. It's going to pop off.
Yeah.
Like you probably know that this is where it starts trending, but it might take 5-6 years for it to really.
Yeah, I mean, 'tis the time of the year, right? It's spring season, right? A lot of people like to sell homes. A lot of people like to buy homes and move. This year feels a little different, right? And mainly because there's some challenges, with interest rates and that sort of thing. But as anyone can tell you, I mean, when rates are up and buyer competition's down, that leads to equity win, right? When you're purchasing a home, whether you're on the investment side of it or if you're on the primary residence side of it. So those are the types of conversations that we're having right now with a lot of customers. A lot of our clients are concerned. The overall sentiment is, should I do it now? Should I sell? Should I buy? Is now the right time, right? And so we do a very, and I've always been this way, I'm the product of 2 teachers. So both my mom and dad are former teachers.
Are they from the Slidell area too? Or?
No, I grew up in a West Bank, aka the best bank, and and you may know something a little about a little trivia on the West Bank. We actually had, I grew up in Morel, Louisiana, so we actually had a rap song by MC Thick. You can kind of Google it. Cruising down the street, real slow. What the fellas be yelling? Morero. So that's our claim. That's our claim to fame. That's our claim to fame in Morero. Go West Bank.
I'm gonna have to look that up. And then the second, there's actually a guy in New Orleans, a local guy. I guess he plays dive bars and stuff like that. But he wrote a song, and it sounds like to the tune of Uptown Girl.
Okay.
But it's West Bank Girl.
Okay.
And it's like this, like something at the fly, like it talks like.
I'm proud of the West Bank.
Yeah. Anyway,
I am.
I'll have to send you that one. You'll have to send me the other one.
So I literally went to.
That's awesome.
I actually went to my mom, where my mom taught. It was literally a mile and a half from my house, Visitation of Our Lady. And Dad was at Archbishop Shaw High School right down the road. So I went to Shaw for 2 years and then ended up transferring to Brother Martin.
That's awesome.
But West Bank's good people.
Yeah.
It is
good people.
So it's interesting. You were raised by two teachers. So tell me how that impacted your career.
It's a no-brainer, and education's in my heart. So I want people to be educated on what they're about to do. And when you're talking about, when you ask somebody, what does home mean to you? Right? Home means a lot to a lot of people for a lot of good reasons, right? It could mean sanctity. It could mean peace. It could mean family. It could mean love, right? So, I adopted that mindset early on that when you're dealing with someone's home, right? I mean, this is something you take very seriously. It could be one of the largest investments someone ever makes.
It often very much is.
It really, it is. And so I've always educated and asked a lot of questions because in our industry, there's a lot of transactional mindset. Approach to our business when it comes to take application, process loan, go to closing, move on to the next one. I've always been kind of a trans-relational kind of guy because the relationship piece is critical. Yeah. Absolutely critical, because that's where your future business comes from if you do it right. Yeah, because someone has a good experience, they're going to tell people. And I have been blessed over the years that people have found that the experience that they had in doing business with me, they wanted to refer their friends, their coworkers, their neighbors, their moms, their dads, the people at church, people at the ballpark, and quite frankly, that has been a true blessing.
Yeah. So do you think? And I know you're going to know the answer to this, but that you've been doing it for 27 years.
Yeah.
How many people come back after they've worked with you the first time to work with you again?
Thanks, Jared, for bringing up my age. Yeah.
You said it.
So no, at the end of the day, I'm seeing generations now. We're seeing grandkids now. Great grandkids. Haven't seen great grandkids yet, but hopefully,
Just give it some time.
If I continue to stay consistent in my delivery and my mindset of making sure that everybody has a great experience, then it sort of takes care of itself, right? It's never about me. I have a team behind me. And we have a really good system in place that allows me to be able to deliver, and that's important. But I think what it boils down to is a lot of, I find in our industry, I think consistency is lacking. Consistently delivering that good news and sometimes not so good news. Some things will come up. We're rocking and rolling through a loan process. Touching the client multiple times during the week. And then all of a sudden we get a phone call from the title company, judgment, right? And those things happen. We don't anticipate that, right? Sure. But how you handle that conversation with that client in that moment is critical, right? Because in some cases it's on the seller side, right? It's not necessarily on the buyer side,
Courtney calls that conversational leadership.
Yeah.
These type of conversations, like having the courage to have a conversation with somebody, deliver the bad news. And the way that we like to approach it here is that we're willing to give you that bad news, but we're also going to give you a solution to it. Bingo. It might not be the solution that you like. It might not be an easy solution, but we're not going to just present you with a problem without having an opportunity to fix it and then putting every energy that we can into trying to get it solved.
Yeah, without a doubt. I mean, you just nailed on the point. It's having those solutions in place. Again, something that maybe came in unexpected, but having some empathy in the moment. Yeah. Because our industry is commission driven, right? So most loan officers really across America are paid based on their production, right? When a loan officer hears that there's an issue on a loan, especially a deal killer type issue, right? The brain stops and they're moving on to other things. And to me, that's one of the things that I'm really super proud of our team is we stop in that moment. And if we have a solution, in some cases, I'm all about collaboration. Yeah. We collaborate 3 times a week at our company, some on a larger scale, but even on a smaller scale, just in my Louisiana and Mississippi group, and we talk about these things. Let's talk about our wins. Let's talk about our learns, right? Because the learns to me is so critical. Not to rejoice,
wins, but people don't realize that
it is. But human nature. You're gonna. If I can share a learn, right, as the leader, right, and I can share a learn and say, hey, this is where I went wrong. This is where we made a mistake. This is where we missed the boat, and I own it.
Yeah,
it's all about ownership. It's about accountability, right? Yeah. You own it. And hopefully you could have navigated through those murky waters, help that client in the right direction so they can get to the goal that they want to get, or maybe have a plan B, right? And maybe recommend them to possibly another lender in town, or maybe somebody who has a portfolio option at one of the local banks, those sort of things. But if that's not handled properly, that's a relationship that can be tarnished and destroy any future opportunity for them to say kind things about you and refer others. So it's ironic because and I don't know what the percentages are, but I probably pull 360 to 380 application credit pulls a year, right? I'm not closing that many loans in a year, right? I mean, the percentage for me is probably 30%, right? Now, it doesn't mean that the other 70%, are just not going to go anywhere. I nurture them, I coach them, I educate them on the sidelines, right? I call it my boot camp. And if they have a desire to purchase, I have a desire to help, and they got me. If it takes a year, 2 years, I had one client that it literally took her 5 years of me encouraging her, installing belief in what is possible, because in her family background, nobody bought a house before, right? Yeah. So this was new territory. So we helped her walk through that process of establishing credit, the importance of maintaining those credit, maintaining reserves, saving money, and she did it.
Yeah, I love that. See, that's generational in a whole different way, right?
Yeah.
And I love that, and I love that you didn't call it wins and losses. It's wins and learns.
It's always about a learn.
And too many people want to. They don't like the confrontation or the conflict of a loss, right?
Right.
The difficult, but that's where we learn.
Yeah.
And that's where we improve. And so I love that approach. I love that mindset. I love your philosophy around how you do it. That's how there's so many people, like, you can come in like, hey, I can get this done for you, the transaction part.
Right.
But it's, man, so many people respond so well through the educational part.
We're dealing with human beings.
Exactly.
Like, we're not dealing with robots, right? So, and human beings have emotions and expectations and desires, and they come in with a past, and they have dreams, right? And in some cases, we have to talk through those dreams if they're not as realistic, right? You know, first-time home buyer that wants to, makes a certain amount of money, and from a budget standpoint, we can only qualify for $200,000, but they've already walked into that $400,000 house that they want.
Exactly.
You know, so a lot of times we have to manage those expectations. I believe in transparency and just straightforwardness. It may not be what they want to hear.
Yeah.
Right.
Yeah.
And that's okay.
Yeah.
I'm okay with that. But I feel like, you know, from a due diligence standpoint, I wouldn't be fair to them to say, oh, we'll make that happen, right?
Yeah,
we're going to
sure.
make that happen. And unfortunately, there are, you know, look, we're blessed, man, especially here on the North Shore. We got some great loan officers out there, and some that are not even working with our company, right?
Yeah.
And we, on occasions, will communicate on difficult situations and challenges. I'm all about collaboration. I am not the smartest guy in the room, right? For me, it's all about learning and asking and getting better. If I can get 1% better on every month, I mean, let's talk about it. I'll take 12% better in a year, right? Yeah. In all aspects, not just production, right? Not just metrics, right? I'm talking about...
That's why we're put on this earth.
Right.
You know what I'm saying? Like,
I agree.
The purpose of time is so that we can get better and better every day. So whenever it's time for us to go, that we're ready to go, we're going to go.
Yeah.
And that's the whole purpose of time. It's not if time didn't exist, you'd be stuck where you were and you wouldn't have the opportunity to improve. Yeah. And that mindset is a key. And when you wrap your brain around that and you think about it, just got to get a little bit better every single day.
It's abundance.
Yeah.
So I know I'm not the only loan officer in town, right? And so for me, if I can leverage the credibility of maybe, you know, another lender who specializes in some doctor's loan or whatnot, right? We do physicians loans, but let's say they have one that's a little better. And that client needs that better loan in order to achieve success in homeownership, right? I'm putting them in that direction, right? Does it hurt a little bit? Yeah, you know, we're passing business, but we're doing the right thing, right? At the end of the day. And to me, that's, we have a very strong culture with our team that everyone resonates in that same mindset, right? But it does make a difference, in my opinion, that the leader leads by example. 100%. Because if I'm saying we need to do it one way and not doing it in that same fashion, eventually there's a culture crack, there's failure, there's resentment, and we're escaping the abundance mindset of, hey, what are we supposed to do here? So I invite all.
Yeah, and it also breaks trust when that doesn't line up, but it really can grow that trust when they're aligned with what you say and what you do, when those are aligned. And so
I agree with you 100%.
Yeah, and you know, it's not always so easy, right? And so what has influenced, you know, when you first started as a lender, okay, did you have these same beliefs, or what has influenced them over the years?
So I have to go back to my family. You know, that's always been my foundation. You know, my dad showed me what hard work looked like. He worked 2 jobs. We always thought we had everything, right? But because we had love, right? So my dad would joke, and he's like, "Hey, we're rich. I'm like, "Oh man, we don't feel rich, Dad. We can't go on vacation next month, you know." But he said, "No, we're rich in love," and so that's always stuck with me. That I have a true passion, always have, for people. And again, it's not being a people pleaser. Right?
Like a yes person.
From a sales, I'm not a yes person, but truly getting to know that person, asking enough questions, get into their heart, right? Just because as a loan officer, or a lender, we could look at a situation from an application and say, oh, well, this is what you need to do, and this is the product you should do it in, and this is the best thing for you. But if we haven't asked them what they're trying to accomplish in that goal, we may be heading in two different directions. Sure. So for me, it's all about really digging in and learning about them. And again, you alluded to it, but didn't necessarily go direct at it. But honestly, I'm a very faithful person, always have been.
Yeah.
And I do believe that homeownership lending and what I do, not only from a core value standpoint and everything that I believe in, but I do believe it's somewhat of a ministry what we do in putting people in the right direction, because home means so much to people, right?
You're doing what God called you to do.
And amen.
Yeah.
So if you think about, for me, it's always about, in some cases, this home is not the right fit for you. Yeah. I mean, you can afford it. Yes, me as a lender says you qualify for it. I've run you through the automated approval system and we can make it happen. But this is 45% of your income going to housing. Yeah. And you've been living with your mom and dad for 5 years, banking money, right? Making good money in your job. Mom putting breakfast, lunch, and dinner on the table. Mom and dad paying your electric bill, your gas bill, your cable bill, all your bills, right? And then in the next 60 days, you're going to be seeing 45% of your income going to your new house note. Yeah. And you got very little money in the bank, right? Is that the right move? Is that the right thing to do? I have them to think about that, right? Because some lenders will take that all day long and say, hey, he's proved in the system. He's got the money to put down. We got a grant and, hey, meets the guidelines. Let's rock and roll. At the end of the day, this is a $3,000 commission. Let's go.
Yeah.
Right.
Well, but that's not holistic thinking.
It's not.
And so you can absolutely be transactional, do that. But then when that person, I mean, I cannot tell you, I've bought, I've helped people, I stopped foreclosures, right? I cannot tell you. I had one where someone put her in a house in 2020. She made one payment and never made another payment. Right. It was not the right fit for her. And I met her in that strife position, and it was like, but there's a level there that I appreciate people who have the foresight to say, look, I could do this, but it's not going to be good where you end up. Yeah.
And here's what I say. It's real simple, especially if they're like, oh, no, Mr. Paul, you don't think I can afford this? I say, my system says you're fine, right? But at the end of the day, what I don't want, back in the day I was coaching baseball, travel baseball. I don't want to show up at church or show up at the grocery store, right? And ask you, how are things going? How's the house? Did you file your homestead exemption, right? Things that a loan officer truly cares about their clients. They're going to follow up and ask and stay and keep that relationship going. I don't want to find out that you lost your house because you couldn't afford it, right? Knock on wood. Right? In 27 years, I've not had one person say the loan that you gave me caused me to lose my house. Wow. Yeah. Right? And I'm proud of that. Right? Now, have I parted ways with certain relationships because that buyer's determined to go in the direction that they want to go? In some cases, yeah. And maybe the guy down the road did the loan and didn't look back, made his commission and kept rolling. But I can sleep really good at night. Yeah. And that's really, I would say at the end of, and again, I've been doing this for 27 years, right? At the end of the day, I stay hungry, I stay humble, and I keep doing the right thing. And to me, if I keep doing that, it's only natural that people are going to feel it in the process with that experience, and they're going to recommend others that they know, like, and trust. Right. And at the end of the day, you build a culture of business, of doing business the right way, where people are going to come back already expecting how they're going to feel through the process. And look, don't get me wrong. We may not be the lowest rate leader in town, right? And again, every business can say that. But the value proposition that people that I do business with, or people that my team does business with, it's worth maybe paying an extra 0.25% if that's the case. Sure. Not always, right? To know that you're taken care of, right? And to me, that's where Now, do we get into situations where someone's looking for a lower rate and that sort of thing? Yes. And that's where salesmanship comes in. Yeah. I mean, let's call it what it is, right? Because we are in a sales-driven industry. But at the end of the day, it makes for doing business easy when you kind of have set that tone. Yeah. So I don't always feel like I'm chasing that next new client, even though it's important to nurture new relationships. If you've got a past, a database of clients, people that have had success with your experience in the past, it makes doing business a lot easier and a lot less stressful for a loan officer.
You said a lot about relationships, so I have an idea that's where we're going to end up going here. But there's a lot of different ways to generate business. Like you have some mortgage lenders that are paying for leads. A lot of them can be cold calling.
Right.
Some of them are really, really good at staying in touch with their past database, and it's very relationship driven. So talk a little bit about how you've grown your business over your career and what relationships mean to you.
So I'm excited about this, all right? Because one of the things I do, and this is not a hidden secret, anybody that's ever done business with someone in the past should have some form of a database or some type of connection, right? Whether it's through an email marketing campaign or just old school, picking up the phone and calling. Yeah. I dedicate 4 hours per week, solid, time-blocked hours per week, calling my database, checking in, thanking them for the business that we had, letting them know what's coming up. It's amazing how people's lives change, right?
Times and
so
yep.
6 months ago, I may contact a client just to check in, and a lot of times it's easy if they're a first-time home buyer, if they're a primary applicant. I always say, "Hey, did you file your homestead exemption?" Right? Yeah. Because that's an easy reminder. Sure. And I cannot tell you how many times they said, "Oh my God, Mr. Paul, thank you so much, for calling me." But I'll go back 10 years, and a lot of times the culture of my database, I can call just about anybody anytime, and they say, "Hey, what's up, Paul?"
Yeah,
right. Because great. I've been doing this for years. Right. But the dedicated time to me, we work so hard as loan officers, especially in this challenging market, right, where we're going after that next deal, we're going after that next relationship, we're always going after that next. But we forget about all the great experiences on people we've already done.
Equity you have.
Think about that. All the I love that. Can I borrow that?
Yeah, of course.
Relationship equity is tremendous. Yeah. And so I dedicate, and I mean hard code, time block, 4 hours a week, right? I feel like that's not a lot of time to give. And a lot of them are just gratitude calls. I'm not calling to sell them anything.
Yeah.
Okay? But I cannot tell you how many loans have come up unexpectedly by just making those gratitude calls. Yeah. Right. Does that make sense?
Of course.
There's no agenda. It's pure gratitude and love.
Do you have a script? Not a script, but is there a purpose to the call before you call, or is it just a hey, just checking to see how things are going?
So I don't have a script.
Yeah.
Because I think every client, you have different levels of relationship, right? If they have multiple clients that you've done business with, a lot of times it's, "Hey, Paul, what's up? I'm at work right now. Can I call you back?" Click, Yeah. And then you've got those clients that maybe you had a great experience with. You closed them one time. That's a different conversation, right? And then I may go a little bit more annual mortgage checkup conversation, like, "Hey, just checking in with you, making sure you're changing your filters, every 90 days. And I do go over some of those housekeeping items. But to me, it's added value. I've already transacted the loan. I've already gotten paid whatever I got paid on it, right? And that particular moment in time builds value. It's like, why would my loan officer call me and do this? What's the agenda? There is no agenda. It's gratitude. Yeah. It's gratitude. It's reminder. It's best practice. It's, hey, you're 1 year in your home. How's that warranty that you purchased at closing? How did that help you? Right. Yeah. Those type of conversations. And to me, I've been talking a lot with my business partners, referral partners, agents, and I'm like, you have got so much of a track record of success in doing what you do, right? And how often do you go back and make those gratitude calls to those people? I mean, you made a lot of home buyers' dreams come true. Like you may have made that investor, that was their first cash flow property, right? I mean, you did a lot to enhance people's lives. they're going to probably take your call.
Yeah, for sure.
Right.
Does that make sense? And you're not selling anything. It's pure gratitude. It's showing them love. But here's the key. At the end, I always say this. If there's anybody in your life that's interested in maybe refinancing, purchasing, or maybe starting their investment journey, please keep me in mind.
Yeah.
And that's it. That is absolutely it. And I say, have a blessed day. And then I go on to the next one. And it would take
making those calls yourself.
Of course I am.
Yeah.
Yeah. And that's, it's interesting you say that, because we have some loan officers outside of Louisiana, Mississippi that actually have someone that makes those calls.
Yeah.
And I tread lightly because, in my opinion, it loses the impact.
The genuine nature of
It does if you've got someone else making those phone calls for you. So no, I own that.
Yeah.
No, and this is,
own
I
that
think,
practice.
what's important is, and we'll talk about systems later, but
Yeah.
there's a level that I want to be able to delegate everything else but those types of phone calls.
Right. Those
the
practices.
relationship, those types of practices,
Yep.
right? Because that is where, I mean, and you bring up a phenomenal point of all of the past clients you've won them over and done business with, they know that you fulfilled your promise.
Right.
That you said you were going to help them do XYZ, and they did that, right? There's a difference between customer, like getting a new customer, and customer retention, right?
Yep.
Too many people only ever focus on the hard work of getting a new customer.
Yes.
They neglect customer retention.
Look at that referral curve, for a new client compared to someone that's already done business with you that had a good experience, right? I mean, that referral curve is long in some
100%.
cases, right?
Exactly.
And not saying, don't get me wrong, we take on new clients every day, right? Yeah. But you restart that process of that know, like, and trust factor. Right. And letting them know, because they're checking your reviews, they're checking you out on social media, they're making sure that you're putting out good stuff. Yeah. And I'm going to tell you right now, I encourage them to do that.
Yeah. Go check me out.
Go check me out on LinkedIn. Go check me out on TikTok. Mm-hmm. Right. I'm serious. Go check me out. I have been meticulous about my own personal brand and the brand of the company when I'm putting out anything, right? And so I encourage that. And what's interesting is a lot of times they come back and say, okay, well, I checked out your reviews and I like that video you did. That was really, really funny. Okay, what's my next step?
Yeah.
Yeah.
So,
right.
But it's important to have all those resources available to you so that you can point to that, right? I mean,
correct.
Having the branding, the social media, having the reviews, those are actual tools that you were saying, hey, because those reviews don't happen by themselves, right? You've got to ask for them. You've got to
be intentional for sure.
Be intentional with those so
correct.
that you can then say, hey, go. I love that when someone says, hey, go check me out. I love that because it's like, hey, look, my reputation and my message that stays consistent. It stands for itself.
Yeah,
I'm more than happy to pass any sniff test that you may have.
Yeah. And, I got a giver's mindset. So, there's a lot of loan officers, different levels of their business, some newer loan officers that maybe don't have that extensive database or that those former clients to go back to. And I let them know that, we all heard the tortoise and the hare story, right?
Yeah.
I've always been the tortoise. Okay. I mean, slow and steady wins the race. I don't want to say wins like we're here because it's a journey, man. It never ends. It never ends. Even when you retire, my dad tells me it doesn't end. Yeah. My dad still wakes up thinking about, the bell going off in the class and having to, go because he was a disciplinarian. So he's still having those dreams and he's at 82 years old, right? Yeah. So it's a journey, right? Mm-hmm. But, we read that story to our kids and, we think, oh, it's cute. But it has a powerful lesson in life.
Yeah.
And I feel that in business, what's critical is teaching people the mindset of flipping the mindset and seeing out their lenses a little differently when approaching business, right? Because I find that I got to be careful how I say this, but everybody wants things boom, boom, boom. Well, when you go and you're applying for a home loan, right? It can't be that. And yes, we have all the technology and all the marketing that makes them feel good. I love our application process, our online process. We've got a lot of automation built into our LOS, and all that feels good. But at the end of the day, they're buying a home, right? And they're going to have certain expenses and certain things. So we take all that very serious. We were very, very gracious that we've stayed on top of the technology and the marketing front. And I like I said, it's just a different mindset, but I think it's an important mindset. And when people do that, what's very interesting is you see it click.
Yeah.
It's like, wow, it's kind of works, you know, and then they stick to it. Where people fall off is in the area of consistency.
Yeah.
Absolutely.
Right? So they stay consistent for 3 months, they see some progress, and then they quit doing those having those systems, those committed systems, those processes in their business that have started to take root. They stop that because they've closed a couple loans, and then their business starts to fall off.
You talk about systems within the way you operate, and I know that you're a regional manager.
So I'm a producing branch manager.
Gotcha.
Yeah. So
and you work at a Slido office, and you have loan officers that you're bringing in, and you have loan officers on your team.
Yes.
And so it's important, as a business owner, and running a team, that in order for you to be able to bring on people and have them be able to operate efficiently, that you have to have a team of people around you that follow a specific process so that you can operate the way that you operate. And then the people you bring in can also leverage that too.
Absolutely. And look, when it comes to recruiting, I find that, man, let me tell you, if it's not LinkedIn, it's Facebook messages. If it's not Facebook messages, it's text messages of, every mortgage company in America. When you achieve some success, right, and you stay consistent over time with production, they have access to all the information, right? Mm-hmm. And so it's just, I call it very cheesy way, because first of all, I'm it's headhunting, right? But I've always found when it comes to recruiting, it's more about attracting, right? Mm-hmm. Rather than going after someone, right? And to me, if you've got the systems in place, most of our processors are what's called decision certified, which means they have the ability to sign off on certain conditions. Where when it gets to an underwriter's desk, it may come down to just the underwriter reviewing the appraisal, basically overlooking the income, making sure that it's good, and then signing off. That streamlines the process dramatically when we've given that ability for our processors they're called decision certified, to be able to make decisions on certain conditions.
These processors are in your office?
So no. So all of our processors, our company is a very hybrid company. So I would say that we may have 50% of our staff that's working remote out of their home office, right? And we're good with that, right? Yeah. Because first of all, I don't, and you guys may agree to disagree, I don't find that there's any such thing as work-life balance. I call it work-life integration, right? Because the environment we're in post-COVID, it's all about integrating work in life and vice versa, right? At times, especially when the agent calls you at 8 o'clock on a random Thursday night and says, I need a pre-qualification letter. Are you busy?
or 10 or 11 o'clock at night or on a Sunday.
Right. Yeah. But back to your point, recruiting is huge for us. And I think we have a value proposition that hits all the green buttons for the right loan officer, right? Someone who wants to be supported, someone who wants a local presence, a local manager who is vested 7 days a week. And yes, I said that out loud. 7 days a week. That's how I serve my people. My team. They know they can get me anytime, right? I'll be in church traditionally, depending on what mass I go to. But before 12 o'clock on Sundays, you're not going to probably get me. After that, I'm game on. Like anybody needs anything. But when it comes to, we are definitely looking to add to our teams in Louisiana and Mississippi. I think we have a very good value proposition. We've got over 400 loan products. We've got the non-QMs. We've got 18 different renovation purchase solutions for all types. And of course, we do all the traditional, right? Yeah. Fannie, Freddie, FHA, VA, and USDA. But I think what really sets us apart, is our one team, one purpose culture. So we're a big company nationwide. We lend in all 50 states because we are tied to Plains Capital Bank.
Oh, cool!
And so that gives us a federal exemption to be able to lend across the United States. There are some states that still require state licensing, but that helps an agent who maybe has a seller relocating to North Carolina or relocating somewhere outside of our area to know that there's that Paul's going to take good care of them and make sure they land safely on the other side, right? Sure. And Paul's going to take care of them. Paul's not going to refer it to a teammate in North Carolina because the relationship is with the agent here. So I do find that that's important because a lot of loan officers are required to just maintain state licensing, and they may only be licensed to lend in Louisiana or Mississippi, or if they've expanded, maybe Florida, Alabama, kind of the Gulf Coast states. But to me, it just I still maintain my state license. I just once we got it, I still do it every single year. But federally, I don't have to.
So you don't. Your office is not, because when you're in Slidell, you get a lot of people who have they have their Louisiana agents or Mississippi agents.
Yes.
But you guys, they don't have to go and get the state because of.
That's correct. Yeah, okay. because we're tied. We're one of our partners is Plains Capital Bank, okay. But we are the mortgage entity, and we have a really good relationship with them and have been. I mean, Prime's been in business for 35 years, and all we do is mortgage. Like, we don't sell widgets, we don't sell insurance. I mean, we have to be good at it,
sure,
right, in order to continue to grow. Yeah. Well, to continue to grow.
But I mean, I know we've talked a lot about during this conversation about your mindset in business, and when we talk about recruiting somebody in, the first thing that we do is make sure that you're a value fit, right? I mean, that's the most important thing. Because you might be the most talented person in the world, but if you don't fit the culture and the values that we want to embody as a team, then you're going to stand like a sore thumb. And I know that's important to you.
Incredibly important.
As these episodes are delivered, I don't want somebody to miss the boat by not seeing one of the other videos about how important it is to you to have a giver's mindset and looking for a lender who's there to put the client's perspective first.
Without a doubt, and the culture everyone talks about culture. It's like, can you get a haircut over the phone? No, you got to be in the seat to be able to experience it, and that's what culture is, right? So it's hard to sell culture, to what I would say is a high quality prospect, if you will. But I try to get to know them. I ask them a lot of questions. I do try to poke at their value system, right? Because but also with social media these days, it's hard not to know who they are when they're not, doing mortgage loans, right? So there's many times that I've been very interested in having someone at least to have a conversation with us that I didn't even make the phone call. After spending some time, looking at their social channels and seeing that they're just not, consistently putting out what I would say resonates with our core values, not just as a company, but who we are, right? And that's one of the things I'm super proud of is that, when you tend to match yourself with a company's culture, with your personal value system to a T. I mean, I'm talking about, there's not one of them that just kind of crosses out that we don't emulate, or on the personal side, how we run our business. I'm very protective of our culture. Yeah. So there's been a lot of opportunities that we've had, some really high quality top producers that we've had to say no to because we did not feel it would be a great culture fit.
And your staff feels that way too. I mean, because what we do, being in the front and doing these types of things, having conversations with people, generating business, there's people behind the scenes that allow us to do that.
Absolutely.
And if you plug in the wrong person to that system and they start pushing those people running the wrong way, those people sacrifice a lot.
That's true.
A lot of time and energy into it.
Or you may lose those people.
And you might lose the good support that you have by bringing on somebody who might put in a couple extra dollars, and now your life's much more difficult. And
it is.
And as a manager and a leader of people, when you have the wrong value system or fit with somebody you're trying to lead and manage, it ends up taking a lot of time away from a producing.
Man, you bring up, Jared, you just hit the point, right? So you may have, let's call it, 100% culture focused individuals doing their part, their job, the system and the process is flowing and humming, right? and you bring maybe someone who's not the best culture fit, maybe they in the previous company they blow up processors and underwriters and yes, they get a lot of business, and maybe their social is not very consistent with the core values. You bring that into your family, your work family, and it could be a major retention challenge, right? So yeah, I'm very, very, very protective of our work culture.
So you brought it up earlier about consumer sentiment right now.
Yes.
We've had very interesting last few years and even our current market. So talk to me about, number one, what are you seeing? And then how do you overcome the very, the ups and downs of consumer sentiment right now?
Let me tell you, I kind of chunked that into 3 categories, right? So the consumer right now, I think lacks a little confidence in the market for a variety of reasons.
Sure.
In our neck of the woods, it's insurance, right?
Yeah.
It's funny because I'm more afraid of insurance than I am of interest rates, right? And as a loan officer, right? Especially from an investor mindset, you get into cash flow and is this a good deal or not, and that sort of thing. So just kind of chunking it. Let's talk about the refinance opportunity, right? So consumer sentiment right now is I'm sitting on a 3.5% interest rate. I'm not going to lose that. And what does Paul say? Don't, right? There's other options. There's other solutions. But Mr. Paul, I'm seeing my credit card debt, continually go up. Interest rates on my credit card. I feel like I'm just spinning my wheels. I'm on a treadmill, right? And I'm feeling, that we're in a cash flow crunch, but I feel like I'm a tenant in my own home, right? Because I got a 3.5% interest rate and I go home and hug it every day, right? But I've got all this debt and maybe my wife lost her job and things have gotten really tight. So from a solution standpoint, a second mortgage is a great option right now, right? Because for the most part, values are still holding. Right. And in some cases, in most areas, we're also seeing appreciation. I've talked to a lot of appraisers and I'm like, are you seeing declining values? And not in most areas, right? Not in most areas. So to me, a viable option, a viable solution for someone seeking or talking about maybe refinancing right now, I say use the equity as leverage to get rid of consumer debt, because down the road, when rates do go down, and I think we all feel optimistic, right, that they will, you could always combine the two mortgages down the road, refinance, shorten your term. There's options.
Well, and there's something to be said of, let's just say it's a 7% second mortgage,
right,
versus a 25 to 30% credit card debt.
Amen.
Like there's actually like logical math that can be done for it.
Yeah.
And there's something to be said that it's not a complete refinance of your entire loan. You're
That's
still
correct.
getting preserved. The majority of your principal balance is on that first at a low rate.
Yeah, and we've done a lot of second mortgages over the last 2 years. Yes, the rates are going to be a little bit higher on the second liens, but there's some major success stories where we've saved $800, $900, $1,000+ per month. That's like going to your boss and getting a raise, and we're talking net, like what shows up in your bank account, right? And to me, so it's a cash flow tool where you're leveraging equity in order to enhance your quality of life, right? And it's not forever. Right, because you could always, combine those 2 mortgages down the road,
You could always pay it off
when the rates drop and you just had two more kids. You sell, pay off both those liens, take your equity, and go buy your next house up. Right. From a purchaser's mindset right now, affordability is the challenge, right? And I would say to an extent inventory, right? So from a purchaser standpoint, especially the first-time home buyer, I feel like they're, with insurance and interest rates, kind of getting kicked in the teeth a little bit on the affordability
They're the most
front.
pressed.
They are, and also self-employed, I find, as well. But on the purchase mindset, again, I stress equity. Like right now, what is equity, right? And we go through those conversations. I mean, if interest rates drop to 5.99% in the next 12 months, 5.99, I'm just a little bit, right? Again, psychologically, it's not 6.
Yeah.
It's 5.99, right? You're going to see buyers in droves jumping into the market, right? Because, oh my gosh, I can get a 5.99% interest rate, using that as an example, right? Well, when that happens, it creates buyer competition. Now the seller in this market might say, hey, I need to sell my house. It's been 90 days. I'm willing to pay $15,000 in closing costs and prepaids and put the new roof on so you can get better insurance.
Yeah.
We're seeing that right now, right? But to me, equity doesn't go away. Once you own it, all it does is, if you buy in an area that continues to appreciate, it should continue to rise, right? So from a buyer's perspective right now, it's all about equity conversations, all about the investment, all about creating wealth in real estate. Even as an owner, we're creating wealth. That's what we do.
The most average American, the majority of their wealth is in their primary home.
Absolutely.
And so wealth creation doesn't have to be some outside factor of an investment. Most people's biggest investment is their home.
Absolutely.
And let me make sure you're what you're saying. Were you about to make a point?
Well, I was going to chunk the third sector, and that's from the seller's perspective.
Yeah.
Right? You've got sellers out there that are they have nice homes and they feel like they're priced right. There's a lot of pride and ownership. The listing agent's done a great job of marketing the properties, but they're sitting, right? Yeah. They maybe get a few visits and nobody's making an offer, right? From the seller's perspective, again, they're looking at it like, hey, I'm sitting on maybe a lower interest rate right now. You're going to have those sectors of sellers that are like, hey, I'm just going to sit tight.
I don't have to sell.
I don't have to sell, right? And that's frustrating for a real estate agent when that seller sits back and says, I'm not budging off my price. If we've got to sit here for the next 6 to 8 months, wait till rates come down and we get somebody who's interested in buying at this price. But I would say in general, what we're seeing is sellers that don't understand that there are solutions in place. Like, for example, the 30-year fixed interest rate temporary buy down. That can go anywhere from a 1 year to a 2 year or even a 3-2-1, right? Where let's say current market rate is 6.5%, right? I mean, that buyer can start that process on a 3-2-1 buy down in the 3s. So you want to rate in the 3s? We can make that happen. Yeah. It's going to be a step up, right? First 12 months, step up. But, when we're using the temporary buy downs, I also asked the client, it's very important that we do this, is do you feel that your income is going to trend with your mortgage payment over the next 2 or 3 years, right? Most cases, people make more money over time, right? And in some cases, if they're getting a bonus, they're getting a raise, that sort of thing, all those things will trend with it. But the idea would be it buys time, it creates affordability, it moves product, right? Seller sells, and they can move on to their next step. But it also allows people to get into homeownership and own equity, because equity's the key right now, right? It's not, because what happens is when those rates go to 5.99%, buyer competition increases. Now sellers have options. Yeah. I got 3 contracts. This one's asking for seller concessions. This is another topic, but I'm going to say it anyway. I'm not paying the buyer's agent's commission on this one. Yep. And number 3, this guy's not asking for anything and he's asking $5,000 under sales price. I'll go with that one. Yeah. Right.
So what I hear you saying is and somebody had mentioned to me, and saying it a little different way, when buyers are waiting for the rates to go down, or there's rumors that the rates are going to go down, right? They sit and wait because they're just waiting to see when the rates are going to go down. Right. But when that does happen, it may make it more difficult. Even though the rates may be more affordable, you may have more competition market. You may have other things happen that make it more difficult.
Anybody remember 2021? Yeah. I mean, let's talk about it, right? Mm-hmm. Hey, 3.5%, woo! There's 10 contracts that go in on a house, right? And somebody's willing to pay $25,000 over sales price with no concessions.
And then people who were limited in what they could do, right? How many of those multiple offers did they have to go through before they were able to win?
You got dreams that are broken.
There's a statistic.
You got a first-time home buyer that puts in a good offer, has a good letter from the lender, feels really good about it. They can't wait. They've told their parents. Yep. And then they lose out on the house.
And how many of them have the stomach to go through that? How many times?
That's right.
And
you're right about that.
There's
That's
a statistic that said that some over 50% of the people who bought a house during COVID are unhappy with the purchase that they made because they probably made.
I haven't seen that statistic, but it makes sense. Yeah, it was emotional.
Mm-hmm. Well, but understand there is another emotion at play right now, which is fear. Yeah, and so people they're still making an emotional purchasing decision by not purchasing. Yeah. But the reality here is so many people say, Courtney, I get this question all the time. Yeah. And I'm just like, the number one regret from the wealthiest, the smartest investors that I know has always been that they regret buying sooner. And that regret it's always a time factor, right? And so I bought my first house at 25. I wish I would have bought it at 18.
Yeah.
Like, I wish at 18 I would have inherited a whole bunch.
right?
We all wish that.
Right.
And why? Because there's so many benefits that come with time.
Right.
And I tell people all the time, I don't care what the market is doing right now, go buy today.
Right.
Go buy, but then buy the best situation for you today.
Yeah.
And so if you are so worried about that you're overpaying, if you're, so in 21, I had a lot of people who were like, should we still buy right now? I said, you know what, go buy grandma's house. Go buy the house that has, wallpaper and like brown carpet that you have a rake for.
You know
what
what's interesting? You bring this up, Courtney. We are seeing a lot of for sale by owner transactions right now. Mm-hmm. Where grandma or aunt or someone, has inherited a property. We're seeing a lot of that. Mm-hmm. And for me as a loan officer, it scares the heck out of me because who are they going to come to write a contract? Mm-hmm. I don't write contracts, right? And so to me, the value of a real estate agent is critical right now in this market. And that's a whole nother topic that we can talk about later.
I think that's a good a good way to end it, because I think people appreciate that, and I think it's true.
Doubt.
That is the right thing for right now. You got to have people that are on protecting.
One last thing though here. I want to, before we wrap up, these have been challenges. Wrap up your thoughts. How are you overcoming the consumer sentiment in general that is stopping transactions, right?
Correct.
So what are your final thoughts on that?
I take the edge off at the beginning of the conversation and say, you don't have to buy now.
Yeah.
You don't. Yeah. Mom and dad want to say, hey, son, you've been living in the back since you graduated college and making good money. You should go buy a house, right? Mm-hmm. I think for me, it's as a loan officer, it's taking that edge off, taking the pressure off of them, and then really asking enough questions to determine their goals and to see if it's the right time. Yeah. It may not be. We're having some conversations where it is not the right time, but they're feeling pressure because their friend bought a house. They're feeling pressure because their cousin bought a house, right? Mm-hmm. They're feeling pressure because mom and dad saying, hey, or they're feeling pressure because they're coming up on a 12-month lease if they're renting.
And their rent might be going up because of
their
insurance.
Rent may be going up, but that's not necessarily a reason to purchase at that point, right? Now, what's the interest rate on rent? 100%, right? Towards the landlord, right? You're building landlord wealth in that scenario.
Absolutely.
So I do talk about that, right? You're paying, yes, you're going to go up to $2,000 a month in rent. That's $24,000 a year that's going to your landlord side of the wealth equation, right? Let me show you what it can look like if you go and purchase a home now.
Absolutely.
Maybe your payment is slightly higher because of insurance and maybe interest rates, but if you've got the right agent as an advocate in your corner and you've got the right lender that can, put together a plan for you, it's got to be a clear plan. You can win equity. And when everybody's diving into the market, when interest rates drop in the next, hopefully 12 to 18 months, right? Yeah. Guess what? You can call me and say, Mr. Paul, you told me about a refinance. Can you remind me what that's all about again? So when everybody's jumping into the market at a 5-point-something% interest rate to go buy a house, you already own equity. You're building your own wealth. Right. And we can maybe now look at refinance rates to see how we can save you money and interest.
Yeah, I think that's key.
Yeah,
I love that.
Well, cool. Well, thanks for coming, Paul.
Hey, man, this has been fun.
Great conversation.
Thank you for having me.
Yeah, man, it's been good. I love having conversations with people who have been doing this for a long time that have seen a lot of stuff because their perspective is different. So I appreciate it, man.
I appreciate the invite, Courtney. Yeah. You are brilliant.
I'm enjoying this conversation with you, man. Thank you.